Hi, this is Joanie Courtney. Thanks for joining me today. I am here to share some insights on the latest employment report from the BLS. The February jobs report was just released last Friday, and would love to share some insights with you today on the labor trends and what we're seeing on the front lines at EmployBridge. So let me start with the labor trends. The February report showed that we added 273,000 jobs for the month of February. This was a really strong report. And not only did we see great numbers added in February, but we also saw that there were positive revisions to both December and January, which really speaks to the overall strength of the job market. Now, saying that, of course, I'm talking about pre-coronavirus, and I know there are a lot of concerns out there from employers and workers, and we're going to talk a little bit about how that may impact the job market, certainly in March and April, and which sectors may get hit the hardest. But for the February report, we did see that we still have 5.8 million people looking for work. Unemployment is at 3.5%. We did see wages tick up nicely, 8 cents, which is up 3% over prior year. And the average work week also ticked up slightly to 34.4 hours. Now, one important indicator that I like to pay attention to is labor participation. Labor participation is at 63.4%, which is pretty steady from where it's been the last month or two. But we are seeing that people are coming back into the workforce. And that's a really important indicator to watch. It's still at about a 50-year low, and certainly something that we're going to continue to see with a strong job market. Will people be interested in coming back into the workforce? So let's take a moment and look at which sectors actually had the most job gains. And you can see that the goods producing sector really bounced back pretty strongly for the month of February. Construction added 42,000 jobs, which is a very strong indicator for the overall health of the economy. But even more importantly, we saw manufacturing bounce back, adding 15,000 jobs, which is a great sign. Certainly this is a sector that we watch closely, and has certainly had impacts with trade in China, and then the most recent coronavirus has impacted manufacturing as well. So great to see 15,000 jobs added in that sector. The mining sector also came back with over 3,000 jobs, so very positive. The service producing sector also was very strong. We saw job gains in most sectors across the board, with the exception of transportation and warehousing, which was down 4,000, and retail trade was down 7,000. But some really strong growth in financial activities, leisure and hospitality, healthcare continues to be strong, and the professional and business service sector continues to be very, very strong. So let's look at unemployment and which sectors really have the lowest unemployment. Unemployment for the last 6 months has been hovering about 3.5% to 3.6% as a national average. But that can look very different based on the sector unemployment, or even geographic areas. Certain geographic areas have much lower unemployment, or some higher. So to look at the sector information, leisure and hospitality is 5.7, so that is above the national average. We do expect that we will see leisure and hospitality impacted by the coronavirus. It is a sector that is cutting back right now with business travel, with personal travel, conferences. So there's going to be some softness in these numbers over the next few months. Construction is at 5.5%, which is down from the prior year, and seeing a strong number, as we just saw in February, with 42,000 jobs. I would expect that that sector will continue to decline. Manufacturing is 3.9%, which is up above last year, but there are hundreds of thousands of jobs available in manufacturing today. It is very difficult to find the experienced, skilled talent that is needed in the workplace in the manufacturing environment today. I do want to point out financial activities, one of the lowest unemployment rates across the country at 1.6%. It is almost impossible to find people in the financial activity sector, so extremely tight market. I do want to spend just a few minutes on sharing some additional insights of what we are seeing at EmployBridge, certainly from the front line. We are working with thousands of employers, both small, medium, and large-size employers across the country, and also thousands of temporary associates. And it's always nice to kind of share what we are seeing from our customers and our temporaries, and maybe make a little more sense of this data. We can tell you that at EmployBridge, we certainly see this is still one of the tightest labor markets that we've seen in 50 years. And so the February job report, it did show us again that the overall strength of the job market right now is very strong. There is a strong demand for talent, and we see that it only continues to be difficult to find experienced, skilled talent in many different sectors. The professional and business service sector, healthcare is certainly challenging. Manufacturing, as I mentioned before, difficult to find experienced talent. So up until this point with the coronavirus, the overall economy and the job market has really been on a very strong trajectory. We do expect some softness, certainly in the job market in March and April, but not expecting huge numbers. We do not see employers getting into a situation where they're looking at mass layoffs. We also see that our workforce today is still healthy and safe to come into work. What we can tell you from the front lines is that employers are taking the coronavirus very seriously, and they are putting communication plans and business continuity plans in place so that if there was someone diagnosed with the coronavirus, they have plans in place to make sure that they can keep their business running. They're looking at allowing people to work from home, looking at different contingency plans. And, you know, it's something that there's just somewhat of an unknown right now. But we're not expecting any big layoffs in March or April. And hopefully we can contain this virus as a country and keep our workforce working and healthy and moving forward. You know, unemployment continues to remain at a 50-year low. It is certainly challenging to find the right talent, and we see that employers really want to focus on retention and engagement and holding on to their workers. So as far as the coronavirus goes, we would expect that if sectors were impacted by it, certainly it's going to be the travel and leisure sector due to companies pulling back on travel. We see the conferences being canceled, so that will impact travel. And really just people are being, you know, staying at home more and don't want to take the risk. So that sector probably will be impacted by jobs. We will see transportation and then possibly manufacturing also being impacted by job growth. So maybe some softness in those sectors. again, we are monitoring this very closely, working with our customers and our workforce. Our primary concern is the health and safety of our workforce, and also being able to provide temporary employment solutions to our customers during these challenging times. But overall, it is still a very strong labor market, difficult to find talent, record low unemployment, and there certainly is a need for more people to enter into the workforce, for companies to provide more training and education so that they have the skilled talent needed to do the jobs of today and tomorrow. I thank you for joining me today for some insights on the February jobs report and what's happening in the labor market, and I look forward to talking to you next month when the March employment report is released. Thanks for joining, and have a wonderful day.